What's going on, guys? Welcome back to another monthly portfolio update for the month of May. So if we remember all the way back a month ago in April, we can see that my portfolio did hit a little bit of a rebound. So if you can see the graph, we did slightly rebound off the lows that were kind of caused due to the riots happening with the burning of Tesla vehicles and the Trump tariffs. That massively just destroyed my portfolio. And we did see a little bit of a recovery. I still continued to massively buy the dip. That paid off as, we did have a recovery towards, the end of April. So now, what does that mean for my portfolio in May? So in May, I did continue to buy, and we also saw, the price recovering, just continue to recover. So if we go over to my portfolio, in my ISA, I'm sitting at 410 shares at a cost of $253.39. And currently, as of recording this video, May 30th, the price is sitting at $346.46, which means, portfolio is valued at $142,000 at a cost of $103,000. And in my general investment account, we're still sitting at 105 shares, sitting at a cost of $255, current price of $346. So I have a cost of $26,000, currently valued at $36,000, which means my total shares across both my accounts, I'm sitting at 515 shares, at an average cost of $253.88. And at a current value of $346.46, I'm currently valued at $176,000. Now, if my UK audience wants it in pounds, that's £131,000. So yeah, I'm not too bad, up 36.46%, which isn't too bad of a return in my opinion. If you go over to the buys for May, as you guys can see, I did add Nvidia to my portfolio thanks to one of you. I got one of your guys' comments got the most likes when I said I'll just buy a share of whatever you guys choose. So I did buy a share of Nvidia at $118. It's such a small part of the portfolio. I haven't even brought it in, but I just thought I'd let you guys know I did buy a share of Nvidia at $118. Not the best price. It was trade like literally when all the whole tariff thing happened. The whole market just, fell. It was in like the 80s, so that would have been an amazing time to buy. But 118, it's not too bad. It was one of your guys' suggestions anyway. So I was like, why not? It's only $118, so I thought I'd add that to my portfolio. Because everyone is always complaining you're not diversified. So no one can say I'm not diversified now. Tesla buys for the month of May. So I bought one share, at $281, and then bought another two shares at $291, two more shares at $286, one more share at $286, two more shares at $342, another two shares at $342, and one share at $356. So yeah, I did add 11 shares to my portfolio over the course of May, which is good. I'm kind of wanting to average the 10 shares a month, so I'm slightly over that. And surprisingly, my shares that I bought that month are up 10.48%, which is pretty good. Obviously, if we go back even a month before that when I was buying, at the lows after the dip, the return on that's even better. So yeah, I'm pretty happy. If we go over to the graph, zoom out and we can see the graph, we can see that although I'm still quite a way off the all-time high, we have had a nice recovery. I'm continuing to buy more, so when we get back to that price of $480 per Tesla share, we're going to be well over. We probably will be nearer the 250 quarter of a million. That's crazy to think about. If we just to get to that price. Anyway, guys, thank you so much for watching. So just a quick, obviously nothing in this video is financial advice, but when my portfolio went from 200,000 down to like 100 and 130,000, you could ever like the emotions inside are telling you to panic sell. But if you graph it like this and you just zoom outwards, and you can see like the actual exponential growth, like only a year before that you were like I was half the value. So why would I worry if it goes from, if it halves here, when if I go back a year ago it was half of what it's just gone down to. So yeah, just if you guys ever panic about your stocks falling, just take a step back and look at the broader picture. Try not to get emotions caught up in it, because that's one of the biggest wealth killers. And where I've made the most mistakes is when I'm making decisions based off emotion. I did when Tesla, just because it is so volatile, in my past I have sold and then bought back in, and sold and bought back in, and yeah, that's I have cost myself five figures, over $10,000 because of that. So I'm currently just buying and holding, and that's what I recommend. Obviously, not financial advice. Do your own research, but that is just the method that I've decided to choose and stick it out, just because all the research that you do. Time in the market always beats time in the market. So anyway, guys, thank you so much for watching. Please make sure to like, subscribe. If you enjoyed the video, please make sure to share if anyone else might be interested. Anyway, guys, that's it for me today, and I'll see you in the next one. Goodbye.